Dogecoin is not just bouncing, it's sending signals that a deeper shift may be underway. After weeks of sideways pressure, price action has flipped from defense to offense, and the market is watching closely. The key isn't just the price rise, but what's happening beneath the surface. Momentum is changing hands, and short traders are getting burned. This sets up a critical test for what could be the next phase in the Dogecoin recovery. At the heart of the movement is a technical breach that analysts are calling significant. Doge has broken above a long-standing descending trendline, one that's held since the peak in late 2024. That's not just chart noise, it's a structural shift. For months, each rally failed at lower highs, reinforcing bearish control. Now, that pattern has been invalidated. Market analyst Javan Marks highlighted this shift, pointing to a bullish MACD divergence forming as price made lower lows while momentum began improving. That kind of divergence is a known precursor to trend reversals, and it's now active in real time. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The numbers tell part of the story, but the behavior tells more. Doge held firm above the 100-day EMA at 0.1064, a key support level. That's not accidental. This moving average has acted as a floor in prior cycles, and its defense suggests underlying demand is absorbing sell pressure. Meanwhile, resistance looms near 0.1248, the 200-day EMA, with a supply zone at 0.1161 in between. A close above 0.1248 on a daily candle would confirm stronger momentum and open the path towards 0.15. But the real target, according to Marks, is 0.6533, a level that would mark a near 500% move from current prices and match highs from the 2021 bull run. Here's where the Dogecoin recovery gets interesting. History may be repeating. Analyst Bit Consensus has identified what looks like the third accumulation phase in Doge's price history. The first two, they preceded rallies of 190% and 480%, respectively. This current phase mirrors that pattern, a tight trading range after a downtrend, followed by a breakout. The idea isn't just hopeful thinking, it's based on observable price structure. If this is truly accumulation 3, then the upside potential isn't speculative, it's precedent-based. But the real fuel behind this move isn't just technicals. Derivatives data reveals a short squeeze in motion. Over a 4-hour window, $17 million in short positions were liquidated, part of a $21 million total. When leverage collapses like this, it forces buying pressure, accelerating price moves. It's a self-reinforcing cycle. Price rises, shorts get squeezed, more buying is triggered. And right now, that mechanism is live. The futures market confirms growing confidence. Open interest has climbed to $1.64 billion, signaling renewed participation. More telling is the funding rate, positive at 0.0057%. That means longs are paying premiums to hold positions, a sign of sustained bullish sentiment. In volatile markets, funding rates often flip negative during fear phases. A positive rate here suggests traders aren't just speculating, they're committing. Still, momentum remains conflicted. The RSI has rotated up from oversold levels and now sits around 62 above neutral. That's constructive. But the MACD, while showing divergence, has dipped slightly below zero, meaning momentum hasn't fully confirmed the breakout yet. This creates a tension. The structure is improving, but the engine isn't fully engaged. A pullback to support could still happen, especially if broader market sentiment shifts. The important part isn't just the breakout, it's what it changes. A confirmed Dogecoin recovery alters the psychology for holders who have waded through months of stagnation. It also pressures sideline traders to re-enter, knowing that missing an accumulation phase has cost money before. And for the broader meme coin sector, Doge's direction often sets the tone. If this rally holds, it could lift others with it. But uncertainty remains. The 0.6533 target is ambitious and depends on sustained strength above key resistance. And while history shows what past accumulation phases led to, it doesn't guarantee future results. Market conditions in 2026 are different. Regulatory scrutiny, macro volatility, and crypto adoption are all variables that weren't present before. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. So what's the next signal to watch? A daily close above 0.1248. That would confirm the trendline break is real and open the path to 0.15 and beyond. Until then, this remains a developing story. The Dogecoin recovery is not guaranteed, but the signals are aligning. And in markets, alignment is where opportunity often emerges.